Hi everyone and welcome to today's Morning Report analysis videos with me, Rich Perry, market analyst at Antic Markets on Friday the 17th of March. We've got a fairly quiet open to the European session, nothing really doing in terms of direction on equities, slight bit of negativity on the DAX, but generally speaking CAC and FTSE are sort of broadly flat, but you've got a little bit of dollar weakness going on as the sort of creeping lower has continued in the last couple of days. You had that sharp move to the downside and it sort of carried on yesterday, and it's sort of creeping lower a bit today. Below that 100 spot 40 support on the dollar index, which I think it sort of equates to some key levels on these majors, such as 0710 on euro dollar and also 113.55 on dollar yen, so a couple of levels there to watch out for. But I'll sort of talk through my charts in a bit, but this is sort of coming as these sort of treasury yields are starting to consolidate a bit. Nothing really in terms of direction on the 2-year or the 10-year today. In terms of equities, yeah, mildly lower on the S&P 500 yesterday, so that's sort of given you that bearish bias, very slight, but nothing too significant. So yeah, markets are fairly quiet today. Nothing really doing in terms of direction that you're going to get off the economic data either until the US session. Industrial production and Michigan sentiment are the two key factors to watch out for. Here we see today, yeah, very quiet day until the US session. Industrial production 0.2% growth on the month, and also capacity utilization just improving slightly to 75.5, but again just basically around about where we've been for the last 6-8 months really. Michigan sentiment is expected to improve slightly to 97. Now 95.7 was the flash reading or the prelim reading of last month, but certainly 97 would sort of take us back towards these sort of nice couple of highs that we had earlier on, sort of December, January time. But generally speaking, consumer sentiment remains pretty positive in the States, and that's reflected in the Michigan sentiment data. So those two bits of data are unlikely to drive too much direction, I think, this afternoon, but we'll wait and see for that. But my chart today is silver, and silver and gold broke sharply higher on that Fed meeting yesterday. Bit of a corrective move on silver, but gold's held up nicely, and silver has sort of held up above that 1725 old key breakout, which became a base of support, and could now again become a basis of support. I think that's going to become a sort of a near-term gauge with these momentum indicators turning around. That stochastic's buy signal needs, I think, to be backed up with some more solid improvement in the momentum on the RSI and MACD lines before you get truly excited about that, certainly considering the sort of disappointing move to the upside that failed at 1756 yesterday, completely unwound following on from that, but no close below 1725, and I think whilst that remains the case, I think you're going to sort of protect that sort of key low that we saw back last week around that 1680 mark, which is around about where that 23.6% fib retracement is of that big bear move. So that is a key sort of level I think the market is going to pay a bit of attention to, but holding up above 1725, I think you're sort of open towards 38.2% fib, which is 1770, which 1770 is also a bit of a near-term pivot as well, encompassing a bit of a high there, a few lows, and bit of a support band as well initially before a breakdown. So it is a bit of a pivot that the market is looking out for, 1770 area. So that again needs to be broken to the upside to really sort of suggest that we are going to retest that old big downtrend, which remains intact. But for now, silver is sort of consolidating a bit, but it needs to hold on to that 1725 pivot line. As you can see on the hourly chart, this is sort of a level that the market is looking out for, 1725, and the momentum indicators have basically now unwound towards levels at which recently the bulls have been coming back in around that sort of 40 level on the hourly RSI, and MACD lines on the hourly starting to turn up, stochastics already starting to turn up, which suggests that the support is sort of building in place. So you could easily see a retest of 1756 at some stage in the coming days. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.